Welcome to the Bear Cave interview series. I'm your host, Edwin Dorsey, and our special guest today is Gabriel Grego. Gabriel runs Quintessential Capital Management and is a well-known activist short seller. Some of the companies he's exposed include American Addiction Centers, Aphria, Foley, Globo, and Bio-On. 4 of those 5 companies are now down over 90% since he began his campaigns. Outside investing, he's a champion kickboxer, has a black belt in karate, and previously served as a paratrooper in the Israel Defense Forces. I'm super excited to have Gabriel here today. Gabriel, how have you been doing?
Well, on and off like everybody, dealing with the coronavirus and its effects, which are even more scary than the virus itself. But overall, so far, so pretty good.
Awesome. So I'm going to jump right in. There was this great institutional investor profile on you that came out last month. And the title of it, which is a quote you gave, is "The managers of these companies are corporate sociopaths." I was wondering if you could tell us a little more about what you mean by that and maybe the context you gave it in, like what you were talking about then.
Well, credit needs to go where it belongs. And honestly, that sentence, I heard it the first time from my friend Nate Anderson from Hindenburg Research. And I'm pretty sure that he had in mind one company that we dealt with together, where, and I'm not going to say any names, but where the key character was actually a very tough person, very aggressive, and gave us a very hard time, and it was a tough but good battle. So what we mean by that in general is that if somebody perpetrates a fraud in a public company, by definition, tends to be quite a character. It's a person that is obviously by definition ready to take any moral compromise that's needed, is by definition selfish, by definition short-term thinking, and can behave quite antisocially, and also that lies with a lot of liberty. So in that case, they are among the worst type of individual you can find in the corporate world. And that's why it takes a special kind of masochism to be an activist short seller, because you're going to piss these people off a lot, and you have to deal with the backlash and the after effects.
Very good, very true. So you mentioned you've teamed up with Nate Anderson at Hindenburg Research, I think for 2 past reports. And I think that's unique in the activist short selling space. I don't think a lot of people have done team up reports. What are the benefits of teaming up? And do you think that's something that should be done more in the future?
Well, that's a good point. And I think I have some straightforward answers. In that case, even as now, the financial transaction where we did collaborate, even though from a price impacts were among my least successful, and in that case, I mean, on both companies that you have in mind, we made about 50%, which by our standards is on the low end. But from a market caps perspective, it was the most successful one. So on a percentage basis, we did a little less money, but we earned less on a percentage basis, but we earned much more in absolute value. And so the advantage is, in our case, I think Nate and I are a bit complementary in what we like to do, in the process that we like to do. So he's unmatched, in my opinion, in this in the world of activist short selling, in terms of his ability to go and retrieve hard to get information from databases, company registers, and the web. He's an amazing analyst. He's very intelligent. He's very persistent, and he's also very brave, I have to say. I do all of that too, but I think he may well be better than me in that kind of analysis. And I certainly enjoy it a little less. What I like to do is what I call field due diligence, where I get information from, visiting the company facilities, interviewing people, and other ways. So in that case, I think we're very complementary. I think I also like to present the thesis a lot. So in that sense, there was a lot of synergies, and that's one advantage. The other advantage is, again, this company that we went after, which was Aphria, was a $5 billion cannabis giant with an enormous PR budget and a very powerful infrastructure to present its thesis, which it used with a lot of the success in increasing their market cap from whatever it was to 5 billion Canadian dollars, despite having virtually no sales and hiding a lot of issues. And to deal with an animal like that alone, even from a psychological perspective, would have been harder. But when you have a friend, it makes things a lot easier, I think. And also, you brainstorm ideas together. So overall, I was very satisfied with working with Nate, both on that occasion and on another occasion. And we frequently speak, and we decided that when we find the right deal, we'll do it again.
Huh. So you mentioned Aphria. It's a Canadian cannabis company. The stock is down roughly 70% since your guys' reports. It still has a $1 billion market cap. Do you have any opinion on the company now, or is it kind of like out of your mind and in the past?
It's mostly out of my mind. I usually keep an eye every once in a while and I check the price, but I think we said whatever needed to be said. The company, to its credit, has at least cosmetically changed its corporate governance. Most of the board is gone. The CEO is gone. We highlighted some issues so everybody's aware of them. So yeah, take a look at it out of curiosity, but we're not going to do anything against that company again.
So Gabriel, I think your claim to fame and how you got a lot of attention when you were starting out is you wrote on this company called Globo back in October 2015. And that same week, the stock was halted, the CEO and CFO resigned, and the company was ultimately declared insolvent. And this has happened again and again, where you write about a company. I think more recently at Akazoo, you wrote about the company last week, and today, a few hours ago, the CEO just resigned. So what are you doing differently than other activist short sellers to get such effective results? How are you finding these ideas that work so well?
Well, look, I don't think I'm particularly good at finding ideas, but I think I may be better than most short sellers in rejecting ideas, meaning that I only intervene if certain elements are met. So it needs to be a total fraud. I don't care about missing a quarter. I don't care about a little bit of creative accounting. I don't care about a weak product. No, I only want either total fraud or management committing crimes. The second thing is I reject everything unless I think I have a fighting chance of finding smoking guns. So sometime, and I could tell you 10 companies now, a lot of them you would know them, which I'm pretty much sure that they're frauds, but and they would be very profitable for us to short. But I will not do anything against them because I don't think I can prove it. And to me, the financial markets are like a criminal court, the investors are like a jury, and I'm like the prosecutor. My task is to convince everybody beyond reasonable doubt that whatever I'm saying is correct. And call me like a prosecutor, which is that scared of losing a case. So I'm good at rejecting anything that doesn't meet these filters. And then there is no magic sauce. What I do is I ask myself, what kind of information would I want to know and find out that would convince the jury that I'm right? And then I do whatever it takes within the limits set by the law and by morality in order to get that information. And then finally, if I find it, I try to present it in a way that is understandable, not only by a financial analyst, but by the average Joe as well. And let the market do its thing.
Very good. And you've been doing that really well. So I want to talk a little more about research process. What's the first thing you look at when you're trying to decide whether or not to spend more time on a company? Because you've talked about kind of the criteria that make a company interesting. Do you open up the 10K and read it? Do you look at more recent lawsuits? Do you look at management history? What are the first 2 or 3 things? How do you spend the first hour or two looking at a company?
It's a good question. I mostly look at accounting red flags. And again, I'm no genius, so I look for simplicity. And there are a few recurrent issues that come up every time a company is committing fraud. Almost always you see discrepancies between cash and accounting earnings. And I'm not talking about a single year. I'm talking about a trend of consistent lack of free cash generation, taken in a context in an industry where you wouldn't expect that. So there are some companies which are in industries where it's normal to have very little free cash generation, either because you need a lot of capex to continue, or because the industry is growing very fast. So the company maybe requires a lot of investments and M&A and all that. So, but in that case, you would see such a pattern throughout the industry and through the competitors as well. On the other hand, you have industries where you wouldn't expect to see that. I give you an example. You mentioned Globo. Globo used to be a software company. Software is inherently a cash generative business. It doesn't require a lot of money in order to reinvest, because the moment you have the software, then you know the marginal cost of selling to an additional user is almost zero. And so you would not expect a company for 10 years in a row to keep showing that whatever large accounting profits are always eaten away by capital expenses and strange acquisitions. So that's the first thing we look for, that kind of accounting irregularities. Another criteria that's important is the size of working capital, especially receivables and inventory. So if you're talking about an industry where everybody received the money within 20 or 30 days, and this company takes 4 months in order to collect its revenue, then something may be wrong. Finally, auditors, and that's an easy one. Be immediately suspicious of any large companies that doesn't use a Big Four, and even if it does use a Big Four, be very suspicious of unexplained changes in auditors. So when somebody changes, say, from PwC to EY, they'd better have a very good reason to do it, because otherwise I'm going to suspect that reason. So this thing, something funny happening with the auditors, and basic accounting red flags usually having to do with cash, they're definitely what attracts my attention first.
Okay, so you've mentioned accounting red flags and suspicious stuff happening with the auditors. There's one company in the news a lot right now that kind of has both those issues, and it's Wirecard. I know that your institutional investor profile said you'd shorted Wirecard back in 2018 unsuccessfully. Do you have any opinion on the situation at Wirecard now?
Yes, I do. And for fairness, I have to disclose that we are right now short Wirecard. It's a small position, and it's not an actively short position. The reason why we're short is that we've been following the story very, very closely since the very beginning, since 2015. Which is when Dan McCrum of the Financial Times started writing about the company. We decided not to act on it, which is maybe the only time that we went short a company without doing any activism. And we decided to do that because we noticed what seems to us like some kind of a reluctance from the German institutions to go after these companies, despite what seems to us as very, very serious recurring suspicions that seem coming up. Now, lately, to our understanding, the company asked KPMG to go through its accounting in an effort to put at rest all of the allegations that this company has been receiving from multiple people, intelligent people, by the way, over and over again. And the result of that check were awful. So it turned out that in my opinion, it turned out that all those allegations are, if not confirmed, but they could not be disproved. And apparently they couldn't be disproved because the company either handed it documents whose authenticity cannot be verified, i.e. screenshots. And for example, they refuse, or they claim not to know the beneficial owner of an investment that they claim to pay 400 million euros or dollars. So they claim not to know the beneficial owner. So it's a convoluted story. It's a complicated story. We're not going to touch on all of it right now. It would take a long time. But if somebody is interested to know what's going on, in my opinion, the truth has been written there over and over, definitely by Dan McCrum, who very courageously kept writing about it. But I also would like to mention Roddy Boyd, and even Zatara, also Fraser Paring wrote about it a lot. So all of these people are very inquisitive, and I think they were very correct. The story is out there. The price hasn't completely followed the evidence around because of institutional resistance, so to speak. But in our opinion, the truth is over there.
So if you have to speculate how this plays out over the coming weeks and months, do you think this is just going to go to zero one day and they're going to admit it? Like, if you had to just guess, because you've been involved in a lot of companies like this, albeit generally on the smaller side, how do you think this plays out over the coming weeks and months?
Well, I have a few things to say. Number one, as I just said, we didn't go short it, and we did not attack it. And that already should tell you something, that I have some reluctance. So when I tell you we only intervene where we are 99.9% sure, A, of being right, and B, of our ability to bring the company down, the fact that we didn't do it in this case should already tell you that I'm not 100% sure. Now, if the allegations that have been thrown against the company are correct, you're talking about a company which may be inventing part of their revenue. If that is the case, they are replacing that revenue with debt, which keep going out every year. And so it's a snowball, castle of cards type of situation, which just by the sheer physics of a structure is bound to collapse one way or another. And it's becoming too large for anybody to even take them over and then take them out of their misery. So my guess is, yes, I think one day this company will blow up. The problem is, again, due to what seems to us as some kind of institutional resistance from going after this company, it's very well possible that the company might blow up organically by its own, by imploding, rather than by somebody coming in and putting an end to the party, like it happened, for example, with Bio-On, or recently with Akazoo, or with Globo, which you mentioned before. In those cases, we showed everybody the truth, and the regulators and the law like intervene and put an end to the party. So far, it seems as though somebody did show the truth, maybe not to the same extent as we would have, but the law hasn't come and stepped in yet. So if it will keep being the case, then it might persevere for a few other years. So that's why it's a small position, and I would recommend anybody, if they want to do such a short, to really do their own due diligence.
Fair enough. You mentioned Akazoo. Last week, you called the company a house of cards. Today, the CEO was fired. I think the stock's down something like 70-60% since your presentation. For those who maybe aren't as familiar, can you walk us through what's happening and what you think's going on at the Akazoo?
Yeah, I mean, I think it's fair to say now, I think Akazoo was a fraud, plain and simple. Akazoo, I think the financial statements are junk. And the only reason why I'm using this word is because this morning the board pretty much say the same thing using a different term, but they say that there are material irregularities, so they can't be relied upon. So that is the definition of a accounting fraud. So what's going on in there? Akazoo is a kind of Spotify. So it's or Apple Music. In concept, it is exactly the same. It's an app that you download on your mobile phone to listen to your favorite music. In size, though, it's like comparing an ant to a whale or an elephant. And the plain and simple, what they did is they've been lying on the number of subscribers, on the number of users, and most likely on revenue and earnings as well. And they've been lying by 1 or 2 orders of magnitude. So they're claiming to be 10 or 100 times larger than they actually are. They probably have been lying almost also on which countries they claim to operate. So in practice, what they do, they have this app. The app functions very poorly, according to a lot of users we spoke to, and also we try to use it ourselves. So it's very user unfriendly, and competes with much better competitors like Spotify, for example. So to make a long story short, nobody uses it. And to simplify, the management has just been pulling numbers out of a hat and feeding it to shareholders. And this situation could have been visible by looking at a bunch of statistics that we showed in our report. And also, though, they close their offices around the world. They make it seem as though they're an international company, where in fact they're all in Greece, or almost all in Greece. So it's one of our favorite stories, the usual thing. It's plain vanilla castle of cards. And when we see those situations, we believe all you need is hitting a little bit the castle, and everything comes crashing down.
Very good. And one common theme with a lot of these companies, and you mentioned it earlier, is a lot of them don't have big four auditors or have suspect auditors. Let's say an investor comes across a company that's not using a big four auditor, more common among small companies.
Yes.
How can they determine whether or not that auditor is doing a good job? Because it would probably be tough if you just see the auditor's name, like to know how legitimate is this? Who are the people auditing it? So what do you do when you come across an auditor that isn't a big four to determine whether or not they're credible?
Well, you can't. I mean, first of all, not using a big four should already be a red flag. There is no reason why a public company, which spends millions of years every year paying its executives, cannot afford, say, $500,000 or even less to get an audit from one of the big four. So the fact that they don't do it, especially when you're talking about a foreign company listing, say, in the US or in the UK, that's a big red flag. Their first duty should be to reassure shareholders. And the best way you do that is by using a reputable auditor. Now, the other issue that we see a lot, for example, in frauds that we uncovered in Greece, is a situation where you have one auditor, which may be even a stronger brand, that's auditing the country where the company is domiciled or where it's headquartered. For example, you mentioned before Globo. Globo was domiciled in Greece and was traded in the UK. And so the auditor was Grant Thornton, and I think it was Grant Thornton Greece. Now, if the company is a multinational company, and if most of the revenue originates not from Greece, but from countries other than Greece, you want to be very careful in a situation where the auditor that audits the foreign subsidiaries is a different entity than the auditor that audits the consolidated financial statements, which is the one that show up on your annual report. Because the way these international audits are made is that, say, EY Greece receives the audits from, company ABC in Malaysia, company ABC in Indonesia. So from all of these foreign audits, which have been signed by local unknown accountants, which are liable are vulnerable to all sort of incentives or pressures. And they don't check those accounts directly. So if I'm a company and I claim, hey, I just sold in Indonesia $50 million worth of streaming music, it's the auditor in Indonesia that's supposed to call and verify that receivable, not the auditor in the company's domicile. You see what I mean?
Yeah.
So when you have this situation, that it's very easy to hide the fraud, for example. So that's one way. If you see a situation like that, be very, very skeptical.
So Gabriel, how do you see your research, or just activist short selling in general, evolving over the next 5 to 10 years? Just how do you see it playing out in the future? Do you think you'll be doing things differently? Are there things you kind of want to do but you don't have the resources to do? Or do you think it's 5 years from now it'll be really similar to what it is today?
Well, one of the good things about what we do is that fraud is one of the oldest human activities. I think fraud for sure predated the invention of money. When people were living in caves and bartering goods, I'm sure that somebody tried to sell you a nice leopard skin, which had some issues with it. So frauds will always exist, and fraud with financial markets will always exist. So we'll always have something to do. Now, the way I see it evolving, the industry is attracting a lot of players. Where it's still considered a niche type of environment, but there are more people doing this than, say, 10 years ago. We were not even around 10 years ago doing this. And I think it's possible that at some point, if a lot of the players are unethical or like to cut red lines, at some point there'll be some kind of backlash against this kind of activities. Your former guest, my friend Marco Hodes, actually wrote an interesting op-ed in the Financial Times. Regardless on whether I agree with his conclusions, I do agree that in the industry there are a lot of smart people, but there are also a lot of people which are cutting corners. And so there is a risk of some kind of regulatory backlash or some kind of rule making things harder. In general, I think this is by far, and I keep repeating it, it's a force for good. To have a number of people or entities whose sole area of activity is going through hundreds and hundreds of public companies and looking for issues and making those issues public is the quintessential activity, a quintessential expression of capitalism and of free markets. So you want the markets to be transparent, you want asset prices to reflect reality. And here you see capitalism working in all of its beauty, where people have a very strong incentive to weed out the bad apples. So you want that to continue, not only because it's right, but also because it serves a tremendous service to the market in that it avoids bubbles, fraudulent bubbles especially, from expanding too much. So if somebody blew the whistle on say Enron 5 years before, far less people would have been hurt by the collapse of Enron. And I can say the same thing about Bio-On. Bio-On would have probably continued in its fraudulent games for another 10 years. When we blew the whistle, it was a 1.3 billion euro market cap. I've no doubt it would reach easily 10 or even 15 billion. And which means that 10 times as many people get hurt when it eventually blows up. So these are cancers, these fraudulent companies. They're like cancers. Like cancer, you want to intervene and remove it early and very aggressively. Some people will get hurt, just like cancer surgery is painful. Shareholders will get hurt. They will lose some money, and those people are very loud. But society as a whole and the markets as a whole tremendously benefit from having activist short sellers over there. And I hope that people as a whole understand this. And I certainly think the regulators understand this, especially in the United States. Then so far, the only time that I've seen them intervening against activist short sellers were times the regulators were right and people hadn't done their job or were spreading lies or things that were poorly researched. Other than that, regulators have usually been on our side, very often intervening against companies which were highlighted as problematic by people like me. I hope this will be the same in other countries. And I hope the public as a whole also gets it. Understand that even though people get hurt, more people benefit from this kind of activity.
So in the last interview I did, I talked to Mark Cahodes, and he said that you were one of his favorite activist short sellers. And I want to ask you the same question. Who are your favorite activist short sellers in the space? And beyond activist short sellers, like what journalists or publications do you read? So like favorite activist short sellers, and then like other people you like reading and like publications.
Yes, I mean, for people which are not 100% familiar with the activist short seller universe, I would like to point out that this is much more of a collaborative type of activity than a competitive type of activity. There is a lot of brainstorming of ideas. There is a lot of friendly competition with my colleagues doing the same type of work. And as in any activity that's very intense and scary and risky and requires a lot of hard work, I think of it like something like the army, for example. Like you form this comradeship with people which have been, serving together with you, or even people that have been doing your same job. So I feel a little bit the same here. And I want to say that I have the utmost respect for all of the activist short sellers, because only by their very activity is people which are willing to risk and put their money, their reputation on the line in order to go after bad actors, which almost always have much more resources than they have. Larger budget. I gave you the example of Aphria, but it's an example that holds everywhere. You're talking about small funds or even individual investors, small research firms that take billion-dollar companies and fearlessly denounce it, risking lawsuits, risking prosecution, while being innocent, sometimes even having physical risks. There's no need for me to repeat, but there have been stories of people having security problems, so to speak. So I have the utmost respect for each and every one short seller, first of all. That said, I have maybe some people whom I know a little bit better, or I know their work a little bit better, and I feel a bit uncomfortable mentioning them because I'm sure I'm going to forget some of them by mistake. And one we mentioned before is my good friend Nate Anderson of Hindenburg Research. I think his research is top notch. I cannot avoid but mentioning Carson Block of Mighty Waters. I think he's smart, and he's definitely one of the pioneers of this, and has been very consistent. But also Sam Adrangi. There are a lot of British, well, Marco Hodis for sure. He's definitely sometimes considering some kind of a mentor and a role model. I told him personally. And many British short sellers are very good. And that's actually the first people I met in this niche. So yeah, I only have good words for almost all of them. And the secret here is to take each one of them individually and try to maybe learn what they do well, and if you can, maybe identify some of the mistakes or some of the points that could be improved. So other two people which are typically not identified as active short seller, but which have engaged in the activity are, for example, Bill Ackman from Pershing Square Capital and David Einhorn. Both of them have done very public activist shorts campaign, and there are certain things that those two guys do very well. For example, the way they handle the media and the way they can present the thesis in a very understandable way and broadcast it very widely, and that those are two prerogatives that they have. Some people do other stuff better. So the idea here is focus on the good and try to avoid the bad.
Very good. So to come up with ideas, are there any journalists or publications you like to follow, or any other ways just to come up with ideas? Like, do you run screens? Is it just talking to other people? Is it just from everywhere and living life? How are you coming up with these ideas to investigate?
We try to keep our eyes open, and so we don't focus on a single thing. We use sometimes basic screenings, like software screening of stocks, which basically filter them for all sort of parameters. Some of those I mentioned before, like those are accounting irregularities. Sometimes it's other funds that come to us and they say, hey, we have these short ideas, and either we don't have enough hard evidence to make a strong thesis, but maybe we can because of our investigational approach. Or maybe sometimes they also have a very good thesis and they extracted most of the information, but maybe they don't have the stomach for a very public campaign. And sometimes is maybe a disgruntled competitor that has a feeling that his competitor has been cutting corners. Sometimes it's serendipity. So for example, one time one of the investors in our fund came to us and told us, hey, we just bought into this company. We thought it was really good. And then the company is now 20% down because there are some doubts on a new product they have. Would you please help us take a look? And we did as a favor. And after we took a look, I say, listen, I have bad news. I mean, I think this company is a fraud. So my suggestion is get out of it. And by the way, do you mind if we short it and then take care of it? And we did. So sometimes it's serendipity. Another way is keep a very close eye on the perpetrators of past fraud or past dishonesty, because people rarely change. And being a fraudster is a profession. And it needs a network of people, and very often it's always the same network of people. The Akazoo that you mentioned is the same network of people to some extent that were responsible for Globo, that were responsible for Velti, that were responsible for Internet Q, and who knows what else. When I say the same people, I don't mean only the same employees. I mean the same executives, sometimes the same board members, sometimes the same companies that took them public, sometimes the same advisors, sometimes the same auditor. So it's a whole network of people that you need in order to do something like that. And if you keep an eye on those, you will see that there is, I won't name any names now because there is no point in risking a lawsuit for defamation if we're not short anything. But there are some investment banks, there are some auditors, there are some law firms that I could name, which tend to be serial enablers of fraud. So you want to keep an eye on those.
So a lot of the times the companies you write on, they get suspended. Their shares get halted
Yes.
days after. And they can stay halted for a while. Mechanically, when you're short something, how does the halt impact your short sale? Does it you can't cover, right? Do you just need to keep paying borrow fees? Is that painful? What happens?
Well, when a company gets halted, and I'm not talking about a temporary suspension. I'm talking about a death certificate. Okay, like the halting before dying. Okay, it's like when a terminal patient gets put on sedation with the intention of him never waking up. That's what I'm talking about. So that kind of suspension is it's a victory. The actively short seller won.
Yeah.
It takes usually from a few weeks to a few months for the stock to be declared worthless. But very often you can arrange something with your broker or with someone else who is long the stock, and by now it's clear what happened.
Yeah.
And you can make a deal and say, hey, the last time the stock was trading at 10 euros, I'll give you half. And very often you'll find a lot of takers after the company is clear that it's a fraud. So you shouldn't worry if you're a short seller when the company gets halted. That's signature of the fact that you won.
So in all your history, what's the short you've been most proud of? What's the thing you're most proud of? Is there one that stands out for you?
Well, each one of them had a different reason to be happy about. So Globo was probably the world record in speed, because the guys surrendered after 48 hours. Like we published the report on Thursday night, and on Saturday they had a board meeting and these guys confessed. So that was, I'm not sure if maybe you follow all my colleagues better. Maybe there is somebody that was faster, but I don't think so, or not many. The one though that is most fun for me is maybe Bio-On, because they had it all, and I'm Italian originally, and that's an Italian company first of all, so it's nice to hit something close to home, and also because they are the guys, maybe together with Aphria, but even to a larger extent than Aphria, they put up the most fights. I mean, I don't know if you followed that campaign, but it was brutal. The guy, the CEO, went on TV every day like lying about this thing, and they had all the press on their side. Not satisfied with that, he even tried to incite the public prosecution to run a criminal probe against us. And I'm proud of the way we defended ourselves. You see, with exceptions, usually the understanding so far for most activist short sellers was that it's the company that sues the short seller. And if anything, the goal of the short seller is just to try to get the suit dismissed. And Bio-On tried to do that. So they first went to the police, and I'm talking about the police station, because in Italy, defamation is a criminal offense, unlike in the US. And they sued us for defamation. The public prosecutor of Bologna started investigating this company. Started investigating the situation because the stock price went down so much, like I think over 80% in 2 days. So they announced that they were going to look into our allegations and into the company's responses. Not satisfied, the company showed up at this prosecutor's office and handed in a criminal complaint against us, which was full of lies, accusing us of, quote, criminal insider trading and market manipulation. And I said, you know what? I'm not going to let them get away. My goal here is not going to be to prove my innocence. I'm going after you guys, and you're going to have to pay. So what I did is I asked around in Italy. I asked who are the top 3 criminal law firms for financial crimes. I found this lawyer. His name was Giampiero Biancolella. Great guy, very friendly too. And we spoke the same day, and he reviewed all the information that I published. He called me and he goes, hey, sleep tight. There's nothing to worry about. I can already tell you how this thing is going to happen. These 2 fraudsters are going to go to jail, and you're going to be the hero here. And I was a bit skeptical because I felt that everybody was against me because I was attacking a company in Bologna, and this was a prosecutor in Bologna. And we hired the maybe one of the best known, if not the best known, Italian business school professor, Maurizio Dall'Occhio, whom together with the lawyer and with me, they worked together, and we produced a 120-page expert opinion on what was happening at Bio-On. I took that opinion, I copy-pasted it, and I filed my own criminal complaint against Bio-On, accusing them of insider trading, because it turned out that these guys were trading before their own BS news releases, market manipulation, and fraudulent accounting. We handed that in, and despite having most of the press against us, after 10 days, out of surprise, at 4 a.m, the entire executive team was arrested. The police got in and stormed the company's headquarters, confiscated all the documents, stock was suspended, went bankrupt after a month, and that was the end of Bio-On. So I'm very proud of that one because we fought back, not only with what we know how to do, which is digging out information, but also on the legal front. And I hope, and if any of my adversaries are listening to this thing, I would like them to remember very well that's not a one-off. If anybody will try to go after us from a legal perspective, we will fight back ferociously. Doesn't matter how much money we need to spend. Doesn't matter how many resources we're gonna put. We're gonna use all in our power to make sure that these companies pay.
So Gabriel, I've really enjoyed this. This has been awesome. I want to give the last word to you. Is there any other stuff you wanted to add? Any questions I didn't ask that stuff you want to say? Any final thoughts?
No, I wanted to say that your initiative, along with the initiative of handful of other publications that cover the activist short selling space, I think are a great initiative. I think it should be very much commended and praised because, again, I really do think that despite the bad name, this activist short selling is a force for good. It should be encouraged and promoted, and hopefully there'll be a lot of younger people that will join our ranks at some point. And what you're doing is a service to this activity. So great idea, well done, and best of luck.
Well, thank you, Gabriel. And if you're listening and have enjoyed this, follow Gabriel and his new ideas on his Twitter at QCM Funds. And if you've liked this interview, follow the Bear Cave newsletter. It's a free weekly newsletter for Wall Street bears that covers the short selling space. There'll be a link in the description. And thank you for listening. Thank you, Gabriel.
Delighted. Thank you.